My guest today is the co-founder and managing partner of The Group Ventures, a Toronto-based venture capital firm.
We're actually going to a period of time where it's a bit difficult for us to get conviction. I don't know if these companies will exist or have a right to exist in a year or 2 years.
The value out of a venture capital investor is their money. Everything else is extra or bonus.
I will not invest in you if I think you need my help in order to succeed. And when you invest in the Canadian ecosystem, I think you have to understand that it's not mature. We have a big problem.
Oh yeah. Do you have any advice for entrepreneurs who are struggling today?
Struggle is part of the job description.
Israel has per capita 19 times more venture capital investments. Why do you think that is?
So over the last couple of years, our fund has been doing more Israeli deals than it has Canadian deals.
We've seen an explosion in anti-Semitism since the October 7th attack in 2023. What do you make of all this? Like, why is this happening?
You know, I think it's the first time I'm kind of moving uneasily in my chair.
Sion, thank you so much for joining us. You have a pretty interesting life story. I understand you were born in Iran, moved to Israel, and then came to Canada eventually. Just walk us through your early life and how you started your first business, all that fun stuff.
Yeah, well, thanks for having me. I guess the starting point, born in Iran, family is actually Iraqi Jews that escaped Iraq in '69. I think not a lot of people talk about it or understand a little bit that kind of the Sephardic backgrounds. But we escaped Iraq in '69, moved to Iran. Iran was actually a great time for Jews and Israelis in the early '70s. I was born there, '78, with the revolution, the Islamic Revolution, and Khamenei. We left and moved to Israel. My mother decided that we're going to live in a place where nobody is going to chuck us out of there. I don't know why she chose Israel, but that seemed like the logical decision for her at the time. Yeah, so I grew up in Israel, did my military service, studied in the UK, then started my own startup in the computational drug discovery space. We were using AI to do drug discovery 25 years ago now. I can't believe it's that long. At the time, AI was actually a bad word. It's not a good word. The term big data didn't even exist. So we weren't telling people we were using AI to do that. Spent about 8 years doing that. We ended up selling that company. We had to sell it about 7 years into the process. More or less at the same time is when I moved to Canada. We were looking at relocating the company to Canada, and the sale process happened during that process. Met the woman who is now my wife at Pearson Airport.
How did you meet her? How do you get to... Just walked up to her randomly?
You know, it was a time that as an entrepreneur and a CEO, I did for tax purposes. We looked at what my residency is, and it was decided that I actually don't have a residency anywhere according to tax law. I was traveling every week, so meeting people at airports and airplanes wasn't unusual. It was the place where I spent more time than anywhere else. But I mean, we were at the Maple Leaf Lounge. She was with a group of friends, and it's not as romantic as it sounds. I met the group, and then eventually every time I'd come, I'd see the group of friends and people, and it took about a year until she actually agreed to go on a date with me. So
he seems like a nice guy, though. I would agree right away to go out with you.
Thank you. I appreciate it. No, she was not as accommodating as you might be. Yeah, and then more or less at the same time, we sold the company and decided, Canada, Toronto is as good a place as any to settle in, and we settled. The first few years, I worked with a company that bought our company. It was a German investment group. Spent a couple of years with them. Very quickly understood that consulting is not what I want to do. Although at the beginning it was amazing. I loved it. I thought, you're getting paid a lot of money and you're not responsible for the outcomes. I was like, consulting is amazing.
That is very much what consulting is.
So I did spend 7 years killing myself for what? But very quickly understood that's not what I want to do. I want to get back into kind of the operational side of things. It wasn't easy. I realized that I do not really have a network in Canada. I need to actually build my relationships and network in Canada. I was looking for an enterprise that I would get excited by, that they need someone like me, that I get excited by the people, kind of stars needed to align. And what I did do is I started investing a little bit here and there. We organically kind of collected a group of operators. We started working together as I'd like to call it a sophisticated investment group, angel investment group. We would look at deals, we would like the deals, we would put some money into the deals, create an SPV. In 2017, 2018, we started looking at whether there's an opportunity here for a fund. We believed that what's happening in Canada, where Canada was going, there was momentum, growth in venture capital. Spent a lot of time figuring out what that opportunity is. What should the thesis be? Do we have a right thesis? Should we build a fund? Did what entrepreneurs do and decided to create an MVP, a proof of concept. We started our first fund. It was a very small fund. Most of the money was our money. We did 4 meaningful investments in it, so obviously high concentration risk.
How big was that first fund?
It was $13 million. We put a thesis that's what we call entrepreneurial or operationally driven thesis in a ecosystem, a tech ecosystem that's not mature. Those were the big, I'd say, kind of overarching
This is
thinking points.
2017, 2018.
Yeah.
Your perspective and that of the group was that Canada was not mature insofar as the startup ecosystem.
Yeah, it was not a mature ecosystem. We still believe it's not a mature ecosystem.
Why? What's the elements or criteria used to come to that assessment?
There's a number of elements you would like to look at. I mean, you can look at how much capital is invested into venture capital. I think that can be misleading. A lot of people looked at the venture capital and how much money, and I don't know if you remember 2017, 2018, 2019, 2020, the numbers grew significantly. I used to say to people, don't look at how much is invested in venture capital, look at how much exits we have in venture capital. That is a measure of maturity more than how much money is invested.
Even the money invested, I would take it a step further. It's not how much, it's who's investing. And about 80% of the dollars can be traced back to some government source, which means if you take the government out, there's no venture ecosystem. There's no startup ecosystem.
There's no flywheel.
Exactly.
It's the flywheel that you need in order to create it. We always compare it to Israel because it's an easy comparison. That's where I come from. We invest in Israel as well. And there, when you look at a mature ecosystem, so it has the flywheel, it has the investors, it has government in a place where it doesn't pick winners, but it does encourage early stage and risk taking. You have a very mature investment community in Israel, and yet I think the numbers are 70, 80% of the money comes from outside of Israel. You have large players in the ecosystem, so any whatever they call the Magnificent Sevens or whomever you want, they all have large R&D product development centers in Israel that are mostly a function of the acquisitions they've done. That's a big part of the ecosystem. You have a steady flow of new entrepreneurs coming into the market, as well as a steady flow of repeat entrepreneurs coming back into the market. All of that creates a mature ecosystem. I used to use this example, and I'd say, when you're building a company and you're investing in companies, and what does it mean if you want to look at it, what does it mean to invest in an ecosystem that's not mature? Part of it is talent. The easy one is you're hiring a head of sales. So you're a company, you're at a couple of million ARR, you raise now $5-10 million in your Series A. You need to hire a head of sales that will take you from $2 to $50 or $100 million in ARR. How many of those do you find in Canada that have been there, done that, took SaaS companies, whatever you want to call it?
The ones that do often go to the U.S. or at some point go to the U.S.
Well, there's not a lot of them.
Right.
If you're in the U.S., you go to a headhunter, you probably find 10, 15, 20 individuals that have been there, done that. That's a sign of maturity, and you can look at that across the, product development, marketing, et cetera, et cetera. Now, again, you need to build that. It takes time to create that maturity. And when you invest in the Canadian ecosystem, I think you have to understand that it's not mature. it's not to say that there aren't great opportunities. There's still great opportunities, but you have to look at that from that point of view, whether how you build your fund, how you work with the entrepreneurs, what services or value you offer those companies, how fast you encourage them to go and look at the U.S. markets. There's a different ways of looking at it.
Was the idea that because it's not mature, there's a lot of value you can capture as an investor? Because if you told me it's not mature, I'm thinking, why would I invest in that ecosystem at all?
So there's definitely an arbitrage.
Right.
I think towards kind of 2020, 2021, that arbitrage was harder to find. And now it's back again. We talked a little bit earlier about some of the statistics and what's happening to early stage investing in Canada. And I think we have a big problem.
Oh, yeah.
And that's creating, again, a bit, I think, of that arbitrage. But, Canadian science, what's coming out of academia, everybody knows we're strong in AI, we're strong. There's a lot of areas where we're very strong at, and that's why there are still opportunities. That said, as a fund and that invests kind of, let's say, post-seed Series A, if there's no deal flow, pre-seed deal flow and seed deal flow, that's a problem.
Right.
And I'd say over the last couple of years, our fund has been doing more Israeli deals than it has Canadian deals.
Yeah, I want to get into that, of course. What's interesting also is that you've only made 4 investments over that first fund, that experimental MVP fund, which bucks kind of most traditional thinking around venture capital. You need a lot of shots on goal in order to find that outsized return. Why did you do that very, very highly concentrated strategy, as opposed to taking that 13 million and distributing it over 20, 30 companies?
Yeah. So 2 things. One, like I said, it was our POC. We were learning. Most of the money was our money. We put together a thesis of how we invest, which means how do you find deals? What kind of deals do you invest in? How do you make investment decisions? And then how do you manage those? And we just wanted to see whether our thesis works or not, whether it's applicable to venture capital, whether we can find good deals, whether we can manage those deals. So that was part of it. Also part of our thesis is more of a every company counts type of approach. So higher concentration. Also in our second fund, we're going to have 10, maybe 11 portfolio companies. That's a high concentration, every company counts type of approach. I want to be careful. I'm not saying that the approach of let's have a large portfolio of companies and hope that we meet the statistics of one does exceptionally outsized returns, a third go to zero, a third give you your money back, and a third that's where you make your money. A lot of great funds and great investors, that's their model. It's one way of doing it. We want to be very well connected to the companies we invest in. We want to act as a trusted advisor. We want to spend time with these companies. It's very hard to scale that as well. So I'd say not only do we think it's the right way to invest, but it's really the only way we know how to do it. Mm-hmm. We're operators, and coming and saying we're going to have 30, 40 portfolio companies per fund, it's just not realistic. It's not how we invest. So we spend much more time in due diligence. We spend much more time in getting to know the companies. We are a very relationship-driven fund as opposed to more transactional. We've actually coined a term we call longitudinal investing. We'll spend 6 months, a year, 2 years sometimes with entrepreneurs before we invest in them. Wow. We'll use that time to get to know them, to help them, to introduce them to investors, clients, experts, whatever is required. But it's about building that relationship and creating that trusted advisory role. Part of it is also understanding that when you invest early stage, you're investing based on qualitative data points. You're not investing based on quantitative data points.
Certainly not at the early stage.
I remember early on as an entrepreneur, I'd go to investors and they'd ask me what my unit economics are. I used to laugh. I'd say, it depends on my mood. I would say anything from I don't have them to I can tell you what I want them to be. But you don't have those. That quantitative data points don't exist. And in order to get good qualitative data, who are you investing in? Who are these people? What's the market? Mm-hmm. What are the market players saying? How are they reacting to this? You need time. You need to do it over a longitudinal period. So we'll take these companies and we'll introduce them to clients. And we'll look at how they engage with these clients. We'll look at what the clients are saying. All of those things are you would call soft data points, but as you accumulate them over time, we think gives you a better understanding of who you're investing in and what the market's going to look like.
So this strategy worked because you're already onto your second fund. My guess when I see people raising second funds that are larger is that their first fund was successful, meaning they made money. So I assume that strategy worked out for you.
Yeah, we think it's working out well. We liked what we saw in the first POC fund. We raised our second fund. Part of our thesis also is not to be a big fund.
How much did you raise for the second fund?
Just under 30. Raising money is an art and a talent in its own.
Raising money is very hard. I've been doing it also because every VC raises money. That's the dirty secret of venture capital. We also have investors, right? It is immensely challenging. And you can have a great track record, great background. Like, it's still immensely difficult.
Yeah, I always say I enjoy the process. I just don't enjoy, the last mile of it. I mean, I love meeting smart people. Usually we don't really raise money from institutions. So you tend to work with family offices, high net worth people who have established themselves. So that process is great. It's the asking for the check that is always
I'm the exact opposite. I don't like talking or meeting with people, but I love asking them for money.
Oh, maybe we should partner.
Skip that entire part of like getting to know them and just give me money.
Well, maybe we should partner then.
I'll be the closer,
Yeah. But kind of going back to the idea of the size of a fund, the data will show you that there is an adverse correlation between AUM growth and performance, especially in early stage investing. There's also a misalignment in interests as the AUM growth between the GPs and the LPs.
Right, and you're right. There's a lot of stats to back that up, and there's a lot of intuitive reasons for that to be the case. Like you said, in terms of misaligned incentives, if you have $1 billion fund and you're clipping 2% annual management fees, there's an incentive just to keep that party going because you're making a ton of money just on your management fees. You don't need the huge financial success. You only need enough success to get the next fund. And then the second thing is something based on something called the law of large money, a law of large numbers. Venture returns have to have a certain absolute exit value attached to every exit. Every venture fund needs a certain amount of absolute exit value to justify the risk, right? The bigger the fund, the higher the exits. So if you have $1 billion fund, you need maybe $2 or $3 billion in exits to justify the fund's risk. To get those $2-3 billion exits is actually very difficult. That means the companies on the other end of it, based on your ownership percentage, you need to have $20 or $30 billion of exits. That is just very hard to find. Just very few, in an absolute sense, there are very few exits of that magnitude in the world every year or over a period of time. And so if you're raising a smaller fund, that 30 billion is maybe $1 billion or maybe 500 million of absolute exit value to get the whatever 3x return you need for your fund. So you're 100% right. I think the number I saw, I don't know if you've seen different things, the optimal venture size, fund size is like 200 to 300 million. Once you get above that, the numbers start to not make sense anymore.
So we haven't looked at it in a while because we haven't raised in a while. So I'm not sure. I think for us, we're looking at it also in the Canadian context.
Right. 300 million USD in the Canadian context would be like some of our largest funds. Yeah.
It's also a function of deal flow. The larger you are as a fund, the more you have to deploy. If you don't have the right deal flow, then you start suffering from adverse selection, and I think that's one of the biggest problems VCs have in general. It's adverse selection.
Can you expand on that? So
adverse selection is you're a big fund. Usually, as a fund, you have a deployment period. It's 3 to 5 years, depending on the fund. A lot of funds like to do it faster than that as well. And if you have to deploy $200 million into a market that's not mature and you don't have enough deal flow, then you start investing in deals that are not as good. You just start to compromise on the quality of the deals because the way funds are structured is you have to deploy your money. And by the way, if you have institutional investors, they put more pressure on you to deploy faster. I can assure you no high net worth individual or family office will ask you why you're not deploying my money. And that creates adverse selection. I think it's part of the reason why, if you look at, again, if we talk in the context, we talked about what is a mature ecosystem, not mature ecosystem. we chose to be sector agnostic. So we don't do pharma, we don't do biotech, medical devices, or anything that requires regulatory approval. We stay away from. But we're sector agnostic. And part of the reason was it's not a mature ecosystem enough. You're not getting enough high quality deal flow. If I'm going to say I'm going to be an IoT only fund or a education tech or choose your vertical, that means every half decent IoT company or marketing tech company in Canada I'm going to have to invest in because there's just not going to be that deal flow. So you have to really kind of think carefully about how you avoid adverse selection. And there's different ways of doing it. So the size of your fund, your investment period, how specific or not you want to be in what you invest in. I'd say in Canada, maybe the only vertical is fintech, financial services, as long as you have a broad definition of what that means.
Are you planning to stay as concentrated as your first fund, or are you like how many investments will you make?
You need a portfolio. You can't have you can't be overly concentrated. So our second fund, and the number, the sweet spot we feel is the right number is 10 to 12 companies in our portfolio, which will probably fund two will end up around 11 companies. It's very difficult to scale also as a small fund that wants to be hands-on. You just, there's just a limit to how much companies you can provide attention to. So we feel that's kind of our sweet spot.
So you guys actually add value. I mean, there's a lot of there's a canard in the venture ecosystem that people can add value. I think it's true in very limited cases. I'm sure it's true in your case because
you have to be very careful. I say to every one of my, and it's a bit of a contradiction when we invest in companies, while a big part of my thesis is to be that trusted advisor, is to work with you, is to try and bring as much value as I can. At the same time, I will not invest in you if I think you need my help in order to succeed.
Right. Exactly.
So there's a bit of a contradiction there. And I say to entrepreneurs, don't look at getting, smart money or money that will create value for you. If it does, that's great. And every investor, every GP I know has very good intentions, and we all want to help our companies. That's just not. That is not the issue of whether you want or don't want to. Just it doesn't always work. It's hard to kind of do it across a large portfolio. It's probably more important to not take money that will be detrimental to you.
Right.
It's more important to optimize for that. But if you don't think you can create a successful business just by taking my money, then you probably shouldn't be running this business, or you're in the wrong, chose the wrong career path.
Right. I've noticed in my own experience, we spend is through inertia. You spend most of your time on companies that aren't successful because you're trying to help them and but the ones that are the most successful, the best thing I found is just stay out of their way. Obviously, you have to do your governance job. If you're on the board, you have to make sure you're keeping everyone accountable and, putting your advice where it's appropriate. But the best founders and the best companies don't really need my help. That's what I found. And so I tell entrepreneurs that the value out of a venture capital investor is their money. Everything else is extra or bonus. Sometimes, I would even say, when it comes to like strategic investors, the value add that you think they're going to give you could be detrimental because it always comes with, usually, not always, it usually comes with strings because they're giving you that value because they need something that only you can give them, and they don't want you to give that to somebody else, like their competitors. So entrepreneurs should be very careful when it comes to value add. Great investors like the top tier ones in the US, and again, I'm sure you guys do this as well, is that they can't really provide value. That's there. But it should always be an extra, like you just said. What are you excited about in terms of, like, when you're looking to invest? You're a generalist investor, but what are you excited about today?
We're actually going to a period of time where it's a bit difficult for us to get conviction. I think what we're seeing with this, LLMs and generative, AI has been around for a long time. I just told you I was doing it 25 years ago. But the advent of these LLMs and what they're doing, they're really kind of upending the game to a large extent. And while we're starting to see what's the expression, where the chips are falling or the cards are falling, so we're starting to get an idea.
Let the chips fall where they may or something.
Well, we're still we still don't know a lot. There's still unknowns. I have no doubt there's going to be massive opportunities for entrepreneurs building smart products. But we don't know where the LLMs, how far they're going to go. How are the big LLM players? How how deep they want to go in product, which products they're going to want to develop. So it's a, and I know it's probably not the smartest thing to say as an investor, but it's harder to get conviction these days for us when we're looking at deals, just because there's lots of questions and unknowns that we're not entirely sure about. What we are investing in, and this year we've only done 2 net new investments. So, cybersecurity, I think is interesting because it's still very, you're going to need it. There's no, the latest investment we did, the company called Malanta in Israel, they're looking at what AI is, the new threats that AI is creating, and trying to deal with that. And that's obviously something that's a problem, and you're going to need to do it. We haven't announced it yet, but we just did another deal, and it's a company that's what people like to call AI native, started with kind of LLMs, in a highly, in a vertical where you require a lot of expertise and a lot of knowledge in order to create a product. So we think that's an area where you'll have an advantage in. But, you look at the legal tech and you look at a lot of these areas, I don't know if these companies will exist or have a right to exist in a year or 2 years. So we're focusing on areas where there is a requirement for a high level of expertise and deep domain and vertical understanding of the market, the industry, but not just that. It's like a product is much more than just some LLM that creates something for you. It's, what are the, who are the players? How decision making is done? What are processes that are being taken? What are workflows that are happening? What do you need to integrate with? All of that creates a really good product. It's not just that, the kernel can do something. So I think that's what we're focusing on right now. And you'll see it in cyber. You'll see it in this particular companies in the compliance space. And again, I think the direction we're looking is these highly complex, deep domain knowledge products. But I mean, we don't know. And we're seeing kind of the large LLM players starting to create healthcare product teams and finance product teams. I think we have to wait and see a little bit. It's not going to take a long time, but we're still trying to figuring it out. But as what we call a conviction investor, it's a term that venture capital likes to use a lot.
As opposed to those that don't invest with conviction?
It is, it's a little bit harder. It's been a little bit harder the past year or so to get to that point of high conviction when we're investing. I mean, if you look at successful investors out there in VCs, you have VCs who did exactly that, managed their portfolio really well, knew, when to double down, when not to double down, who will be winners faster and soon, and then you have others that had high concentration risk. Every company counts. I don't think there's one way of being successful. I always remember when I started my working career, I worked with my dad, and one of the things I remember, he was a very, very good at doing deals. I never met a better deal maker than my dad. And we would sit in these meetings and I would say, no, I don't have the ability you have to do that. And I remember he said to me, there are literally 1,000 ways to skin a cat. Figure out what is your super power. What are you good at creating? And then leverage that in order to be successful. There's not one way of doing it. Right. And I remember that stuck with me, and I think about it all the time, and who we are, what are we strong at, what do we bring to the table, let's leverage that to be successful, not to try and be something we're not.
Right, that's great advice from your father. What would you say is the most challenging aspect of being a venture capital investor?
In the last 2.5 years, DPI.
Okay, making money basically.
What do you find DPI?
DPI, for those who don't know, is distribution to paid-in capital. I think that's what that means. Yeah. It means your returns, but actually getting the cash, not just on
cash
paper.
Returns.
Yeah.
It's been a tough, I'd say, 2.5 years for the industry. DPI has been hard to come by. In the last 2.5 years, just less exits. IPOs are almost kind of non-existent anymore. So that's a big challenge. It's industry-wide. I think everybody's suffering from that. What is the big challenge? I think again it goes back. It's individual. For me, what is a big challenge is probably not necessarily what's a big challenge for you. I think we're now learning to how to go from, the zoom in, zoom out. We are very much zoom in every company. Every time something happens to a company, good or bad, that determines, what my mood is and how I feel. And people ask me, how are you doing? It says, well, it depends on which one of my portfolio companies I spoke with this morning. And being able to zoom out and look at it just as a portfolio, as an overall portfolio, and how that's performing and what's the risk. I'm finding the zooming out harder and a challenge, especially as your portfolio size grows. I'd say that's one of my challenges, but venture capital is hard. Most VCs or most funds don't make a lot of huge returns.
Right.
It is a very, very difficult space to be in. It is a very, I think, difficult space to measure and evaluate. You look at a fund and you're saying, okay, if you have a fund that did 30 investments and one did 30x and the rest did 0. I'm using an extreme. Is that a good investor? The fund gave you 3 or 4 or 5x return. So you're outcome-based, this is a good investor. But if you did 30 investments and all of them went to 0 except for one that did outsized return, do I measure how good an investor you are based on an outlier? So it's a tough space. It's not easy.
Sometimes you have to wait 10 years for that outlier to even pay you any money.
No, you have to wait. You need to assume it's going to take you early stage. If you're an early stage investor,
right,
you have to assume you're going to see overall fund returns. Nothing, you don't start creating DPI in less than 5 years and assume it's going to take you 10 years.
Right.
And those timelines are actually getting longer and longer now.
Right. So you talked about investing in Israel, and I find it to be a pretty interesting topic, not only because I'm Israeli, but certainly because of what's going on with the war in Gaza and all the rise of anti-Semitism here in Canada and in the U.S., of course. Just some interesting stats out there. Israel, relative to Canada in the first half of 2025, has per capita 19 times more venture capital investments, meaning startups are raising 19 times more. Israel, for those who don't know, is 1/4 the size of Canada and is obviously facing immense challenges from the geopolitical and all the boycott nonsense, the war where a significant portion of its population is called up to reserve duty, right? And it's disproportionately affects the startup ecosystem because a lot of the people that are entrepreneurs are still in reserve duty. The older you are, technically you're kind of go out of reserves. So it affects the startup ecosystem, and they're still just destroying Canada when it comes to becoming an innovation ecosystem. First of all, why do you think that is? Why are they just so much better? Why is Israel just so much better than Canada? We have so much natural resources. We have great universities. I think our population mostly is, pretty, good and risk-taking, all that stuff. 19 times, 3 times, I'd understand. 19 times.
It goes back a lot of it to, a mature ecosystem versus an ecosystem that's not a mature ecosystem. Israel is a very mature ecosystem. What you're talking about took decades to build. This isn't a overnight success. And Israel is only 75 years old. But it has taken decades to create that ecosystem. We talked about that flywheel. There are better, smarter people than me that analyzed why Israel is such a successful tech ecosystem. If you haven't read, and I'm sure a lot of your listeners have, but if you haven't, Startup Nation or The Genius of Israel is a great books you want to go and read, and does a really good analysis of it. The last couple of years, I can give you a lot of reasons. We're at awe from our entrepreneurs, the employees of our companies, what's happening in Israel. The fact that the tech ecosystem is still not just doing well, it's thriving.
Right.
Is I kind of say after October 7th and the last 2 years, and I'm seeing what's happening in Israel, I became a bit more religious, but it's because I don't have a really rational explanation to why they're doing so well. We can talk about a lot of things and what's created it, but it is I think it's a little miracle in many ways. But they're strong, they're out there, they're working. There are challenges. I think saying there aren't any challenges will be a big kind of mistake. There's more isolation. Travel has become harder. These companies aren't going out there and doing as much travel and sales as they could have. We're not seeing, at least we haven't seen overt examples of someone says, we're not going to do business with you. Is it happening? I'm sure it's happening, but we're not seeing it. I think in the business world, you're seeing that less. Again, I don't get me on the exact numbers, but I think last year and this year, we're already seeing back to 70, 80% of money invested in the tech ecosystem in Israel comes from outside of Israel. So it's not like investors have stopped. It's not like people are not buying these products. But that's also a very insulated industry, which is the tech industry. Mm-hmm. I think if we look at the academic world, you look at healthcare, definitely those areas are suffering.
So I want to look at even your kind of investment so far. I think in your first fund, you mentioned to me before that 3 were Canadian, 1 was Israeli, or 2 and 2?
2 and 2. 2
and 2, right. And today, it's significantly more Israeli investments than Canadian investments, right? So what's the mix approximately?
At the end of the day, we're going to invest in what we think are the best deals that will generate the best return to our investors.
Right.
I think post-COVID, Canada, we have a problem in Canada. The numbers are showing it. There's just not enough pre-seed, seed deals happening. And this is going to be a big problem for us going forward. If I'm not mistaken, the CVCA 2024 analysis basically said, we're not seeing pre-seed and seed deals. And if you're late stage, you don't have a problem raising money in Canada.
I remember I was so annoyed. I was at the CVCA event in Calgary. Was it like May or something? And everyone was like cheering this stat that, venture capital in the late stage is great. I'm like, guys, the pre-seed and seed have collapsed. There's like nothing. And they're pointing to a couple of deals that like crazy high deals that brought that number up. And I'm like, pre-seed basically doesn't exist. There's like, in the first half of 2025, I'm just going off memory now, I think there's like 30 or 40 deals in pre-seed in the entire country. It's like, that means the ecosystem doesn't exist.
That's very bad news to the ecosystem.
Yeah.
But at the same time, I think the BDC at the same week announced that it was putting $1 billion into late stage. So I think we do have to recalibrate here. We also, part of our investment thesis is investing in what we call, some will call it deep tech. We want differentiated tech. So a strong technology basis. Israel is stronger in those kind of companies. So we do less of what we refer to as tech-enabled businesses, which is where Canada is stronger than Israel probably in that sense. So we also already have that bias built into it. But there is the pipeline is drying up.
Right.
And I think we need to understand that it's a problem and we need to deal with it. By the way, even if we deal with it today, if miraculously, let's say the ecosystem understands, decides, puts in programs to change that, it will still take another 5 years for that to be implemented for these very early stage companies to become post-seed, Series A. Like, it's still going to be 5 years. And what are you going to do in the meantime? It's a problem.
Right.
And I think we need to solve it and we need to kind of think about it.
The subtext here for people that don't understand how big of a problem this is, let me just talk directly to the people that are listening. When you have capital and your responsibility is to make a great return for your investors, you're going to go where the opportunities are the best. Unless you have some patriotic duty that you're willing to sacrifice your investors' capital to just invest in Canada, you're not going to invest in Canada if the environment to invest isn't good here, if the opportunities aren't here, or if the government makes it difficult for you to invest. So like what you're doing, you're finding your opportunities in Israel, where you have a great network already and you're finding great opportunities. So it's not like you don't want to invest in Canada, it's just you're finding your opportunities elsewhere. I know from my experience and from those of other VCs, instead of maybe Israel, they're going to the US because that's where they're close to, they have a network there. So if they're finding opportunities in the US and they don't have a mandate specifically for Canada, the money that they've raised is going to the US, right? It's just, that's what happens when you have a bad ecosystem, where you don't encourage entrepreneurship, when you make it difficult for people to build businesses. It's just, that's what's happening. And the more the government, I'm not going to get into my rant. I'm going to leave my rant for Sion if he wants to rant. But That's just just a perfect example of what we see, obviously on a micro scale with you, but it's happening on a macro scale with a lot of other investors.
I don't know how not. Like I'm not talking to all of my colleagues about it, but I think generally speaking, we're seeing that the pipeline is drying out. And
I want to just double click on that.
Can do a better job.
Yeah, because entrepreneurs will listen to this and say, what are you talking about? There's thousands and there's no shortage of entrepreneurs that need capital. So when you say the pipeline is drying up, what do you mean by that? Because there's plenty of entrepreneurs that need capital.
So there's not enough capital going into the highest risk, earlier stage deal flow.
Mm-hmm.
And that's that pre-seed, seed stages. That's where it's the highest risk. That's where the private capital tends to be the most weary of, and where you see less money. I mean, you'll see much more private capital going into late stage, large companies, high like private equity, et cetera. You don't see most of it going into pre-seed and seed because it's a higher risk. It's harder to invest in those stages.
Right, which is the announcement by BDC to put $1 billion into late stage the startup ecosystem is like it doesn't make any sense. To the extent the government should be involved at all in private funding of companies, which is a debate in and of itself. But let's even say we agreed that they have some role to play in basically picking winners in the economy and saying, we're going to give funding to these funds and to these startups. They should be involved in the area where private capital is the weakest, that private capital doesn't want to go, which is, like you said, the early stage. And I can count on my fingers the amount of serious VCs with funds that invest in pre-seed startups in Canada. They're very, very few. And for good reasons. And you have to raise a certain amount. There are good reasons for that. Being someone myself that has dealt with that question, how early do you invest in a place like Canada, right? But that, to the extent the government has any role to play, it's exactly in that space. So what do you think we could be doing differently?
So one, I think the government does have a role and can play a role, but I completely agree in the sense that the role needs to be in how do you create, one, an environment where taking risk is encouraged, and two is how do you help create as much of that deal flow and take away that very high risk from investors. It should not, under any circumstance, be picking winners. Government is never going to be good at picking who are good funds or good investors or good companies. That's not what they're going to be good at. I will go so far as to say, if you're now raising your third or fourth fund, or on the entrepreneurial side, if you're a late stage, growth stage company, you shouldn't be getting $1 from government.
Mm-hmm.
If you are in your third, definitely fourth fund, if you're raising $100 million and you cannot do that in the private market, government shouldn't be giving you money. It shouldn't be coming from there. And I think that's part of what we're seeing has evolved over the last decade, I think, in Canada, where there's probably, like you said, most VCs at some level are government-backed. That means most companies are government-backed. And what you're not seeing is that seeding stage.
Right.
We go back to Israel and what Israel did. One of the good things the government did in Israel is if you have a good idea, if you have a half-decent idea, and you're able to get $50,000 from home, friends and family, you could probably get a couple of $100,000 from the government to get started. That is where the high risk is. But if you create an environment where there is a lot of deal flow, pre-seed, seed, you create a situation where take that $1 billion that's going to late stage and say, I'm going to now divide that into chunks of $200,000 to $300,000, create a low barrier of what is required for you to get that money, maybe provide you some assistance in legal and accounting and things like that to set up a company. You will see, I don't know, do the maths, but you will see thousands of pre-seed and seed companies in Canada. And now that will create a situation where people will say, wait a minute, there's a lot of deal flow. I remember in 2017, 2018, when we started our fund, we looked, and that was the case. There was so much pre-seed and seed deals happening, and we said, hey, as a post-seed Series A investor, just look at the amount of deal flow we're going to see over the next couple of years. That was a big part of our thesis. Mm-hmm. And government can play a role in that. But I think in the last decade, government money has steered away from early stage double down, funds of funds, which are, to start with, are risk-averse entity, and they invested in the same funds, and those funds grew and grew, and as they grew, they stopped doing 200, 300, $500,000 checks in companies. They needed to go up the value chain. And then they came and said, well, wait a minute, I can't just do Canadian because I have more money and I can't just deploy it in Canada. So we started letting them also invest outside of Canada, still with Canadian government money. And I think that it took about a decade to happen. And that's what I'm saying. It takes a decade to change the trajectory.
Mm-hmm.
But I think that's where government should play, at the high risk, where private money won't play. Research, deep tech research, things like that.
Right. We talked a lot about Israel because we're both Israeli and Jewish and have strong belief in the state of Israel, I'm sure. Unfortunately, what's happened in Canada over the last couple of years, it's been happening for a lot longer, obviously, but we've seen an explosion in anti-Semitism since the October 7th attack in 2023. And you would think the opposite would happen, that at least, oh my goodness, first of all, not every Jews here, in the minds of normal people, say, well, they're not responsible for the actions of the Israeli government. To the extent you can criticize the Israeli government, what does that have to do with some random Jew in Toronto, right? But people don't make that distinction, number one. And number two, they use that as an excuse to justify their attacks against Jews here. Like just in Toronto, people, when they protest Israel, quote unquote, when they protest Israel, they're really doing a protest in favor of Hamas, but they go to Jewish communities specifically. They're not just going to the Israeli embassy or the consulate or whatever it is. They're going to what they know is predominantly Jewish neighborhoods, and they're protesting there and harassing and doing all that. So I'll ask you, as a Jew, as an Israeli, what do you make of all this? Like, why is this happening in Canada?
I think it's the first time I'm kind of moving uneasily in my chair. It's a very difficult subject as an Israeli, as a Jew, as a father of young children that we're raising here in Canada. You refer to me as Sion, but my name is Zion.
Oh.
That is actually what my name is. It's spelled with an S because we come from Iraq, and in Arabic, the letter tzaddik is a heavy S. Yeah, so if you ever hear in Arabic media they saying Zionist, they'll say Sayuniyin. So I'm named after my grandfather, who was born in 1920, and he's named after his grandfather, so 18 something. So long before Israel was even thought of. But it's my name. I can't escape it. So it's a difficult topic. I think I'm very blessed and very lucky. I met this woman, brilliant Israeli. She's she's a psychologist that specializes in trauma, Miri, and she just came out with this. She published this study they did. They call it traumatic invalidation, and basically it's something that every Jew is experiencing, it's a traumatic invalidation is a clinical term. It's known in the world of psychology. It's essentially when you experience trauma and that trauma is invalidated. And people don't believe you, think that you're the reason it happened. They find reasons to blame you for it, that they say it's not that bad, all of those things. So I think every Jew probably knows that, understands that feeling, is close to them. And I remember one of the things she talked about is how your ecosystem and the people around you, and a lot of people at work, friends, got invalidated. So I'd start by saying that I think I'm extremely lucky because I realized that my ecosystem, from my friends and family and employees and my investors, I did not get invalidated. So I think that's a big part of where I'm lucky to have had this network around me, but I think lots of Jews are not and have not had that. As to why is it happening, I don't know. I think the symptoms and the problems are you're seeing, it's just become okay to be anti-Semitic. It's become allowed. I would go as far as saying it's almost become institutionalized. Institutions are allowing it to happen. I had a conversation. One of my LPs is a family office, Orthodox Jews, and I had this conversation, and I said to him, "You're a visible Jew." I'm going to paraphrase if he's ever going to listen to this. Probably not exactly, but and I said, "What are you experiencing?" Because it's not like I'm walking in the streets and people are coming to me or saying things to me. And he said, well, still 80% of the reactions I get are positive, and 20% are negative, and that's kind of how it was also before October 7th. I said, but the 20% that's negative, is it more violent? And the answer was yes, absolutely. So I don't know that all of a sudden Canada has become more people are anti-Semitic. I think the ones who have an issue, have become louder and more violent, and society is allowing it. And that's where I say it's become institutionalized. I mean, you think about the Toronto District School Board, that is basically, about a year ago, passed a resolution that talks about what do they call it? Anti-Palestinian racism. It's about the Palestinian narrative, and it has to be taught. Essentially, that new policy says that one, you cannot argue anymore with anybody about the Palestinian narrative, because that makes you racist, and B, you can't be a Zionist. It's in my name. Like, Zion is in my name. They've essentially said Jews are not welcome in the public school system. That's exactly what they've said. I know some will argue no, and still Jews are going and they're welcome.
As long as they renounce all aspects of what makes a Jew. Yeah.
Essentially, and again, like, I remember I had this conversation with one of my partners, and we had this, and I said, how can my child go there when her father's name is Zion? Like, so it's a problem. It's one we need to deal with. I think it's going to take a long time. It's not going to happen. This trajectory isn't going to change all of a sudden. I think our children are going to have a very different experience of what it is to be Jewish in the diaspora than we did. But one would argue that our experience was the anomaly. You look 2,000 years back, that's how Jews lived. But we have to concentrate on our allies. We have a lot of allies. We have to arm them. We have to give them the ability to speak louder, to fight it. But it's going to take a while. What's happening in schools and universities, it didn't happen overnight. This radicalization, this anti-Semitism has been growing for at least a couple of decades. It'll take a couple of decades to change that.
Right.
It's very sad, but my 13-year-old daughter, basically, when I said to her, about universities and where you should go to, and I said, there are universities where it's going to be hard for you, and she said, well, why do people need to know I'm Jewish? And I said, well, why would you want to go to a place where you can't express who you are and be comfortable with who you are? And she said to me, well, Abba, this is just the way you have to be in Canada now. So she understands something that I'm still refusing to understand. But I think that's going to be their life. It will take a long time. And we just have to take a deep breath, understand that it's going to be a marathon, and keep fighting the good fight. There is no magic wand. It's not like tomorrow we'll get a conservative government and it's going to change everything.
Right. It's just that's a crazy story that your daughter that young would perceive that to be the case.
Talk about cognitive dissonance. Yeah. Like she knows what I refuse to accept and believe.
Right. And just to put some stats around it, the Toronto Police Service, the police services around the country report, so to speak, hate crimes, whatever that means. But they report on religious-based crime. So to the extent that you can identify a crime targeted because of someone's religion, I think there were some 1,200 or 1,300 incidents in Canada in 2024, and over 900 of them, I think 920 is the exact number, are directed towards Jews, which is an overwhelming majority. And you'd be surprised to know, not you, but most people would be surprised to learn that Jews make up less than 1% of the Canadian population. So an overwhelming majority of the religious-based crimes in the country are directed towards less than 1% of the population. And that's increased since October 7th. That's increased.
Here's the real question and challenge. Out of those, what do you say, 900?
920, I think.
How much of those were prosecuted? What did the institutions do in order to tell people this is wrong? And when municipal, government, federal, whatever, isn't dealing with it, that is essentially saying it's okay. And that is the problem. I'm not worried about how many incidents. Of course I am. and the growth in the incidence. I'm worried about the fact that it's become okay. It's become mainstream. We accept it, and that means it's institutionalized.
Right. I mean, we just learned today, at the time of this recording, that we'll put up a video. We'll put up a video here just so people can see what I'm talking about. In Montreal, a visibly religious Orthodox Jewish man was randomly attacked in front of his kids. It was a very, very disgusting video. And we just learned today that the person that committed that crime is not going to be prosecuted because of what nonsense reason. It was the guy wasn't in the right state of mind. It was hot that day, whatever. We'll link to an article down below just so people can see it. And you're right. Like, if just the basic, just upholding the law, just don't attack random people in public, leave aside the fact that it was a Jew, like, that person should have been prosecuted because the person's going to do it again. People that go randomly attack people are the type of people to randomly go attack people again and again. It's very sad.
Yeah, I mean, again, I don't know the statistics. I'm not going to say what are people going to do again or not do again. You can have a policy, and the policy can say, we are, as a community, not allowing this. This is not okay. And the institutions are not doing that.
My last question here, last couple of questions here. Do you have any advice for entrepreneurs who are struggling today?
Struggle is part of the job description. If you're not struggling, or if you have a problem with struggle, then you're in the wrong business. It's a struggle. It's hard. You need to understand it's hard. I don't know any entrepreneur that's not gone through struggle. So that's part of the process. Embrace it. Be part of it. Make sure that your support systems, whether it's your partner, your family, your friends, are there to help you through that. And you gotta be resilient. Now, more practical advice. It's if we're in Canada, I think you should start looking at raising money outside of Canada. There's more opportunities. It's easier said than done, but I'd say that's what you're gonna need to start looking at. You need to find ways to do more with less, and time works against you. Time is the one resource that you cannot buy more of, get more of. So sense of urgency, which I think often you see less in Canadian entrepreneurs, is required.
Wow. Thank you for that. That's a great way to leave off on. Sion, thank you so much for joining us. I learned quite a lot.
Thank you.